Is it time? All right. Let's get right to it. panw. I believe that is Palo Alto Networks Inc., New York Stock Exchange. And I just got an alert for this one. And check this guy out, man. Let's go straight to it. What we have here is, all right, let's see how it built up. Stage one. And off it goes. Breakout. Pull back. And continuation all the way. This beautiful stage two. And let's see if the trend line rule would have been good for you. And check this out, man. Wow. It just rode that trend line. 1, 2, 3, 4, 5. Wow. Check that out. And you would have exited almost close to the top, man. This, you can't get better than that. So really respect that trend line. Beautiful stage two. Here's the Ichimoku cloud, the resistance. So we would have waited for a breakout above the resistance, above the breakout line, above the 30-week moving average. And it could have been this one, this candle right here. What do we need? We need 2 times the average of the previous 4 or 5 weeks. We have it. We have the close above the horizontal pattern, above the Ichimoku cloud. That's for the A++ setup. The extra plus I'm adding on top of Stan's A+, triple confirmation. And we have the RSI already starting to go through over the halfway point. And for this candle, we're going upwards right here. So we're still going upwards, already in bullish, and already in more than half the midpoint point. And here we go. That was nice. And again, I have the ADX here, but that's just for my personal testing, in case I want to do a scanner, and I'm checking out how I could use ADX under 20 as a stage 1 and 3 identifier, and ADX above as a stage 2 or 4. And right now, if you check that out, ADX would have given me a breakout right where above the cloud, right here. So one of these two candles, the ADX was starting to go over the 20 point, over the 20 mark, and off it went. And that's all she wrote. You would have had a chance on the pullback. Ooh, went back deep in. But you see on the less volume. And when it moved up, you have good volume. And that's just awesome right there. All the way up. Half your position there. And you would have also taken half right here. I look at the VRSI to identify my pullbacks. I would have had traders here. That's their sell stop. Traders, investors right here, traders here. But when there's trend line violation, investors use the trader's weight. So everything would have been triggered out around this area. That's just an awesome, awesome stage 2. What happened from there? We had a stage 3. We had a breakdown below the Ichimoku cloud right here. That didn't quite, it did work. Went down, pulled back, and then it rode. Here's the super trend line. To respect the trend line. 1, 2, 3. And you would have triggered out all the way here, almost at the bottom. That is just beautiful. And after that, you would have rode that stage 4 down. Then we go back into a stage 1. And nothing much happening here. See, you could have thought this was a breakout right here above the Ichimoku. No, because see, we have the... You could have thought this was a breakout right here. But you didn't have the... You didn't have twice the volume of the previous 4 weeks. 4 or 5 weeks average. So not A plus setup, maybe just a setup. And we could have also went to confirm on the monthly candle chart to see if you would have been no man's land. Let's check it out. So here's our line, and right here you see there's no entry compared to here before. Like, I use the monthly candles on my classical trading framework, my simple framework. I put the RSI there because I use it for divergence, but honestly, if you read correctly the monthly chart and you just really respect candles, you don't need anything. Even the moving average is not needed. And right here you have your bottom. So that candle that we had, that breakout, valid breakout on the monthly candle. You have the trend, you have the power with you, and you're set to go. This is the resistance on the monthly candle. It's not, you calculate from the close or opens, and that's where you draw the lines. Anything in the wicks is intra noise. It's closes of weekly candles. It's closes of, or it's the highs of the days of the weeklies, the dailies, and all that's just noise. So if you want the truest resistance or support, that's where you draw your lines. And all right, so that's it. So that was good for that one. We had the monthly on our side. The breakdown. We had this candle right here. I'm going to put an arrow. I don't know where it's going to land on the weekly chart. We also had a confirmed move here. And right here we didn't break above the resistance. And we would have not played that on because even the 3-week moving average was going down. So even the trend, everything not in its favor at that point. Although here it seems to be right here. I don't know. We're going to go look on the weekly. But right here, this is a breakout on the monthly candle chart right there. And I think that's what's going to bring us close to today. Let's go back to Stan on the weekly. And here it is. It's at the beginning of the candle. That is... Okay, that's the second week. So the candle closed here. But we're still in the Ichimoku cloud. So on the weekly, you really want that. You want to close below the Ichimoku cloud on the weekly to have the A++ setup. That's just... You're lowering your chances. You're increasing your chances of... not getting whipsawed if you really wait for a close below it. Gotta respect it. I've seen it over since I've been including it in my Stan system, Strand framework. It's helped me out a lot and avoided a lot of whipsaws. And the A++ setup, that's adding the monthly candle chart to it, then you're golden. And here is where we are today. So on the monthly, remember, this is the line I drew. So it broke out on the monthly above the noise, above these closes and these wicks, above that breakout line. And off we go. How is it for Stan? Stan. Here it is. This candle here. This is the one that has a lot of volume. This is the go ahead candle right there. And either patient for it, or you could have probably jumped the gun maybe on these smaller candles, but I don't see, maybe this one here, but I don't see a candle breaking out above the resistance line, above the breakout line with twice the volume of the previous 4 weeks. But right here you could have just kept an eye on it. And here it's picking up. So you retrace, pull back right here on lower volume. And that's perfect. So I'm wondering right now, the week's not over. Volume's picking up. There's a continuation play right here. Usually it's better to wait till it gets closer to the 30-week moving average. But this could be a good opportunity to jump in. Or maybe ideally it would have been here at the beginning of... the previous week. We could have gotten right there. So I like Palo Alto as a stage 2 continuation breakout. Looks very strong. If I be honest, I rather would have catch it at the bottom, like any stage 2, any stage 4. Like you put the most chances on your side when you really catch it at the beginning, but after you've had all the confirmations. It's already had a substantial 50% move. It has the volume on the breakout. It has the RSI going over the halfway point. And you're above or below the Ichimoku cloud, depending direction you're going in. And you have the monthly candle. But based on the monthly candle, let me go back to the monthly candle chart. Look at that. This could probably be this would have been the measured move I probably would have had. I would have had this bottom formation and added to the breakout line of 160, and I'd have a target of 210. Knowing that right here I would have gotten to some congestion around the 190 level, and the month is not over yet, just beginning. This could might not close here with just, it could be a wick, and the price could retrace to back down to 190. So I think we'd have to wait. So what I'm going to do is I'm going to put an alert for Palo Alto. If it goes back down below, if it doesn't go down below this level, the 190, close above, I think I'll give it a go for the on the weekly chart. Yeah. And here we are. Right here. And it coincides with that breakout line right here. All right, man. Palo Alto, I think could be a good candidate for a stage 2 continuation breakout. A nice long base. And you're breaking above good resistance from a previous top formation. Let's see how you go in the future. Look at that, man. There's no there's no more support, no more resistance. Keep inversing both, guys. All right, before I do any more inversion of terms and dyslexia, it's time to say see ya.